friends, if you're visiting my channel for the first time, my name is Michelle D'Souza. I'm a licensed financial advisor in Ontario. In some of my previous videos, I spoke about RRSP as the RRSP season just went by. I also mentioned in my previous video how to increase your net pay every paycheck and reduce tax deducted at source. In this video, I'm going to talk about TFSA, the tax-free savings account. This is actually an amazing investment vehicle that is brought about by the Canadian government for anyone who has a valid SIN number. This was started in 2009 and is relatively new compared to the RRSP program. The concept of this program is very simple. You might have seen articles around this or have seen videos as well on TFSA. You basically take your net pay or your taxed money, put it in any investment vehicle under the TFSA umbrella. It grows completely tax-free over the years. And when you withdraw as well, you have absolutely no tax liabilities. So no more paperwork. So in your early years, you can use this vehicle for any of your short-term goals. And in your retirement years, if used wisely, TFSA can help in your estate planning process as well. As I mentioned earlier, you don't need an income to start a TFSA. You only need to be above the age of 18 and you should have a valid social insurance number. So these are easy criteria to be met when it comes to investing in TFSA. So there is a contribution room that the government sets apart every year for TFSA, and you keep accumulating that contribution room if you haven't invested in TFSA in the previous years. As of 2022, January 2022, the TFSA contribution room given is $6,000 for this year. And if you were above the age of 18 as of 2009 and have never invested in TFSA and were a resident of Canada, then you would have accumulated a contribution room of $81,500 over the years. So now let's come to the fun part. How can you use this investment vehicle to actually get the best of returns? This is called tax-free savings account. But please do not use the bank savings account to invest in TFSA, because all you get is just like 0.5% returns. If you know that you're going to need that money in the next 1 to 2 years, maybe try a fixed rate bond, which at least gives you more than 1% of returns. Diversify. Under the same TFSA umbrella, you can have multiple investments done in different accounts. So make use of this particular investment tool wisely. Another thing that you have to be careful about when it comes to TFSA is the withdrawal. To give you a very simple example of 2022, we have $6,000 of investment, right? So what you can do is you can use that to put it in some of the investment accounts in January, and say you plan to remove that money by June. So Mr. A put $6,000 in January 2022. He removes that money in June 2022 and assumes that he got his $6,000 contribution room back. But that's not the case. He needs to wait until January 2023 for the withdrawal room to get added on to his contribution room. So important thing is, if you're withdrawing, you will have to wait till the January of next year to repay that contribution room. Please be careful about this. So the best part that you can do when it comes to withdrawal is you can plan your withdrawal in December of any year. Good part is, again, December is a festive season and you will immediately get back your contribution room in January. The third thing that you need to consider with TFSA is, say you live in Canada for 2 years, 3 years, work here and want to migrate to a different country, say US or anywhere in Europe or back to India. In such a scenario, you actually can continue your TFSA investments while you are not a resident in Canada without any tax liabilities. But note that you wouldn't be gaining any more contribution rule. Say Mr. A was living in Canada in 2013 and 2014 and he invested in TFSA based on the contribution rule of those 2 years. He can continue that investments for as long as he wishes. And if he leaves Canada and comes back to Canada, say in 2022, his room gets accumulated from 2022. So all the number of years that he didn't spend in Canada, he was able to grow his investments tax-free. That's the best part about TFSA. The fourth thing is, it's always better to have a successor holder on TFSA rather than a beneficiary. And I'm going to put the link of a video that explains this concept very well over here in the description. Please do check it out as to why a successor holder is better than a beneficiary. The fifth thing is, if you are a day trader. I know a lot of people who use TFSA as a day trading mechanism because all the profits that you can make out of your trades are tax-free, right? Really a win-win situation. But please be careful of not locking in your profits and withdrawing that money, because if you do that, you lose track of your contribution room over the days, and then if you do not take care of the contribution room, you will end up paying 1% penalty for over contribution over the months. So these are all the things that you can make use of when it comes to TFSA. If you've got a bulky tax return this year, maybe shift it to your TFSA account to make use of that tax-free returns. I wish Canadian government gave us more contribution room for TFSA, right? This is one of the best investment vehicles that is there in Canada. I hope you found my content useful. If you did, please do click the like, share and subscribe button. And I hope to see you all in the next video. Thank you so much for watching.